Welcome, everybody, to this week's podcast episode for the Financial Freedom Podcast. I'm your host, Dr. Christopher Liu. And as you know, we talk about 4 different types of freedom: time, financial, location, health freedom. And in that light, I'm always interviewing entrepreneurs, investors, people on the cutting edge, sharing those messages, inspiration, and sharing it with the world. So today we have Brent Allen. He's a CFO. And he's a serial entrepreneur with a background in accounting. And he's going to discuss how businesses can leverage their numbers to get more cash on hand and utilize labor strategies to boost financial viability. So today's going to be talking about financial strategies to navigate recessions, finances, CFO. And with that, I'll introduce him to the show and let him talk about his background. So Brett, welcome.
Thank you. I appreciate it. Appreciate the opportunity to be here today and to talk to your audience. I do have a background in accounting. I went to school, got my degree, and subsequently got my CPA license. I don't know if this is similar to your listeners or not, but my grandfather was an accountant, my dad was an accountant, and so I saw the value in having that background. Although that wasn't something that I wanted to do for my entire career. I have a traditional accounting background. I did my time in what they call public accounting, which is what you traditionally think of as a CPA. So your auditor, your tax preparer. And then I got the opportunity to be a CFO for a growing business, one of my clients. And that led to me learning a lot about the reality of business, what it really takes, and not just looking at it from the numbers. That background has helped me significantly. Had a couple other subsequent CFO positions, everything from learning how to really manage expenses in a stagnant or shrinking environment. I was a CFO for a furniture manufacturer for a while, and we all know that that's not a growth business. And then I've also been the CFO for businesses that were growing, 100, 200% a year that were capital intensive. So really understanding how you bridge the gap between what your goals are and what your current resources are, how you take those leaps. About 6 years ago, I started my own. The goal of that consulting firm, operationally excellent, folks who were just great at their craft, but were stuck in one way or another. They were stuck organizationally with the growth. They couldn't figure out how to make enough money, or they were stuck in their time. So it is, hey, we're making money, but I'm having to grind it out 50, 60 hours a week. This business can't live without me. How do I make a transition? So we've been, it's been really exciting over the last 6 years, seeing a lot of our clients succeed and thrive. About 2 years ago, we decided to put our money where our mouth is and start buying businesses and putting our back end systems into those businesses without me being involved in the day-to-day operations. And that's also been greatly successful. So I love sharing, how do you do this? How do you get out from behind the chair and get out and do more with what you want to do in life?
Yeah. Interesting. It's a very interesting time in business because there's so much uncertainty. And then you saw like 2020, your business can just get shut down overnight. And we never know what's going to happen because they're always messing with interest rates, printing money, all this. I'll just start out with the first question is how can we prepare for recessions?
Yeah, Chris, great question. I'm gonna tell you, I get excited. I get fired up over volatility, and I would encourage everybody inside, all your listeners, to do the same thing. Most people get scared in any type of volatility. Whether things are going straight up or straight down, or just uncertainty in the economy. I feel like there's been uncertainty for almost all of the last 20 years economically. And the folks that I've really seen succeed are people who get aggressive in times of uncertainty. So I saw a number of businesses double and triple both their top line and bottom line through the 2020, 2021 pandemic because their competitors were sitting on their heels while they were making bold moves. What unlocks that possibility for you without just being irresponsible is to have great financial modeling and to really understand downside scenarios and how to mitigate those downside scenarios. So hopefully this will answer your question. But what I would encourage folks to do, and what we did in 2020. So in March of 2020, when the world as we knew it kind of fell apart, nobody knew whether we were in for a month or 10 years worth of financial depression or recession. We acted quickly with our clients. We got in, we understood what does it look like if we go to 80% of our revenue, 60% of our revenue, 40% of our revenue. We stared those things in the face. Some of the scenarios were really, really ugly. But then we prepared for them. So we got our banking partners on board. We put all pieces in place and the plans in place that even if the worst case scenario that we could imagine were to happen, we were ready for it. And once we had that foundation to operate off of, now we went and got really aggressive and with new marketing campaigns, new expansion strategies. And again, we saw our clients really not just survive, but thrive. So I would encourage your listeners that if you take that, we may go into I think it's everybody agrees that we're in a recession, going into recession. What that's going to mean and how deep that recession is going to be is up for debate. But no matter what, you and your listeners could come out of 2023 stronger against your competition than you've ever been.
Yeah, interesting. And the basic premise around, preparing for recession, be greedy when others are fearful, double down. And you've seen what are some of the best strategies to maintain healthy cash flow?
Yeah, that's one of my favorite Warren Buffett quotes. Get scared when other people are greedy and get greedy when other people are scared. That's heavily paraphrased. Cash is king, Chris. And what I would tell you is banks and financial institutions, folks that will help you place like lines of credit, you believe in, or they respond well when you have clear financial plans. Not when you go talk to them about how great you are or how great your business is, but when you were able to go to them, you have to remember that financial institutions operate on very thin margins. They can't afford to ever lose. They would rather turn away 20 good deals to turn away one or two bad ones than they would the vice versa. So what they want to know is, do you have plans? Are you looking at everything through rose-colored glasses, or do you have plans for things go sideways that you're going to survive and be able to continue to pay them back? So I think first and foremost, I would encourage all your listeners to go to banks and get some type of line of credit, even if they think they would never ever need it. If you wait till the day that you need that cash, it's going to be very hard to convince a bank to give it to you. If we talk about your cash flow inside the business, outside of alternative financing, obviously that there's two main factors, and that is your profitability and your working capital requirements. So it is, am I making enough money? Is how much of revenue, top line revenue dollars coming down to the bottom line? And then now at that point, if you've got good profitability, let's call it 10, 15, 20%, are you looking at your receivables and your payables and potentially any inventory, supplies, debt payments that you might have? So I encourage folks to structure their cost highly variable as possible. So as much as you can structure your cost to fluctuate with your top line revenue, the better off you are when times get a little bit slow. But Chris, I hate to say cash flow is a very, it's all encompassing. It's the result of everything you do in business. I'm a heavy believer in forecasting and knowing what your 13-week or 26-week cash flow, what you expect it to look like, so you can make little tweaks along the way. I find that if you wait until a week or 2 weeks or 3 weeks out, when you might have a little bit of a cash flow pinch, you have to make some very substantial and significant adjustments. Whereas if I see it coming 13 weeks away, I can make very fine adjustments and end up with the same result.
Yeah, it's interesting. It's like cash flow is like lifeblood, is like oxygen, and that's how you can make investments and pay your staff and expand. And you talked about profitability, and what's interesting is there's this idea where a lot of business owners, they talk about, they bring in, let's say, 50,000 a month or whatever, but then they still losing money, and they don't understand this idea of profitability. And it's based around this idea of cash flow. So expand upon that.
Sure. So again, pure profitability is, does it cost me more to perform my service than I'm charging for it? And I've seen a lot of businesses that are very proud of their sales. They're very proud of their top line. But I'm here to tell you that if I was selling dollars for nickels, I'd be a very successful salesman as well. I mean, that's an easy thing to do. So understand your market. Sometimes, Chris, unfortunately, I don't know, again, the specific disciplines your listeners are in, but sometimes you see gaps in the market and you want to fill those gaps with services. But sometimes there are reasons why there are gaps in the market. There are just some products where it costs more to deliver the service than what most consumers are willing to pay for it. So you have to really be honest with yourself. I would tell you that anything you go into, you should do a cost, some type of cost study, build a business case for it. So that you're clear that even though this is something you're passionate about, it's something you could also make money doing. I see a lot of business owners that make investments because a good salesman visits them, or because they like the idea. It sounds sexy to have a new piece of equipment or a second or third office. When if somebody was really to sit down and put pen to paper, you would find that it's just not a good investment. If you're taking a significant risk, which sometimes that's hard to gauge when you're an entrepreneur because you think you're in control of more things than you are. But when you're taking significant risk, it's going to take your time, your unique abilities, energy, and efforts. You should be getting, 15, 20, 30% return on your money, because you can go put that same money into passive investments, and really in today's world, you should be, I think, expecting to make double digit returns with substantially less risk and substantially less effort on your part. Go ahead.
No, that's like, it's so well said. And the other thing is, we're talking about so you talked about especially lines of credit, credits, all of these great financing deals. And what advice would you give someone seeking out business funding?
Yeah. So again, you need to do your homework. So you can, I see a lot of folks that are great operationally know in their gut, because they have been on the front lines. They've been interacting with the customers. They have a good feel for something new they want to invest in as a good idea. You need to be able to quantify that. You need to be able to stress test it. You need to understand from a very financial perspective what the expected return is on that new idea. And if you do that, if you come up with an idea that looks like it can present a 15, 20, 30% return, then it's all about having somebody knowledgeable and speaking the same language as banks that will help you unlock capital that's relatively cheap. As a business owner, you taking your profits, let's just say at the end of the year, you got $500,000 in profits. For you to roll back into an investment, you have to assume that the cost of money for you to do that has to be, again, in the 10, 20, 30%, whereas a bank, the cost of money is, somewhere in the fives, 5-6%. So you want to take as much of that bank money as possible, as long as you're confident in the fact investment where you're putting that money is going to pay off substantially more than the cost of it. I don't know if that answers your question, Chris, but really you need somebody that understands how that banking world works. Specifically in service-based industries, I run across a lot of folks that say banks won't give me any money, banks don't understand me, and frankly, they just don't know how to talk to banks. The folks that I talk to, they don't know how to present their information in a way that the banks can consume it, digest it, and then give them the capital they need.
Yeah, interesting. What really stands out to me is this idea that seeking out business capital, business funding before you need it. And that's like really key, especially, because you never know when you might need that line of credit. Now, let's say your business is profitable. What should business owners put in place before considering selling a business?
Oh, goodness. So there's so many factors to selling a business, but probably the top couple factors. Number one is, how much does your business rely or depend on you or some other single failure point? That's going to be a major. As an investor, investor never wants a single failure point. So if I come in and your practice is all revolves around you, and if I were to pull you out of that practice, that's questionable as to how unique it would be, or even if it would continue to be viable, then you're looking at a much lower sale price. And frankly, what you're looking at is a much longer earnout period. Probably somebody's going to say, yeah, Chris, I'll come buy your business, but you got to sign a 5-year contract to continue working for me for 50, 60 hours a week. And again, I find that most business owners that want to sell are not interested in long-term employment post-sale. That's not the reason why they're trying to make a deal. So I would encourage business owners to have somebody in that can help them value the business, that can tell them what the levers are. And one of those main levers is testing for how dependent your business is on you. And then start to put in systems and process and redundancies that will allow your business, allow you to start taking a vacation, go to Europe for a month. Chris, what I find more than anything, when people start putting these measures in place, they get more profitable, and then they want to sell their business less. That desire fades away because all of a sudden they have freedom with their time, and their business is running without them having to grind on a daily basis.
Yeah, very fascinating. And as we come to the conclusion of this talk, one thing is that business owners will ask is, how can we make sure we're getting the best price when selling a business?
You need to have a professional helping you. I hate to say that that continues to be my advice. If you hire a broker, that broker is going to charge you a substantial amount of money to sell that business. When you take your business and you professionally market it and you put it out to, let's call it 20, 50 potential buyers, you are going to find the folks that are going to pay the most. And just the fact that you're in that process, people's offers are going to increase because they understand it's competitive. I've sold a number of businesses, and there are just unique circumstances. If it may be that your practice is in an area where somebody else wants to expand into and put a hub there, or it may be a dark spot in their map from a coverage perspective. Those folks are going to be willing to pay more for your business than somebody who already has a location there and doesn't need that particular expertise in that area. So it's the strategy around selling, finding the buyer that you have the most value to is the important part. It's not as much about trying to beat more money out of people, because the buyers have financial formulas that are very tight and rigid. So you have to be worth more to
them. Very fantastic discussion. I'm always interested in business valuation, cost of capital, your returns. Because ultimately, when you're in a business, you have a successful, you get in, you want to sell it, and it can be quite, lucrative. So, how do people contact you, follow you, visit your website, and reach out to you?
Sure. Our website is Amplify, and it's got an I in Amplify instead of a Y. But one of the things that we do, particularly during this season, for folks that I'm talking to, just because I'm passionate about this, I'm offering some free introductory conversations. So if some of your listeners have something they want to talk through for a half hour, I'll send you a link, and you can post it with the podcast. They're welcome to sign up and schedule with me. I think we've got 8 or 10 slots for that. And once those fill up, then we have products where we have teams of CFOs and financial advisors that can just meet with you, whether it's weekly, monthly, quarterly, or once or twice a year, to make sure that you are on track and that you're seeing things from a financial and accounting standpoint in a way that's going to help you reach your goals.
Yeah. And for all the listeners out there, be sure to check out Brent's resources in the links and show notes. Be sure to check him out on his web. With that, thanks so much for coming onto the podcast, dropping a lot of gems and nuggets of wisdom. And thanks for coming onto the show.
Thank you.